Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, November 30th. I hope you guys had a wonderful Thanksgiving weekend and uh, were able to have plenty to be grateful for. So we'll start right into it. We have the Chicago PMI today, which is the manufacturing in the New York in the Chicago region. So as you see, back in October we had a 56.2, which is good because it's above 50, which is expansion. Anything below is contraction, which leads to November, which we show contraction. So obviously not good. This is about the sixth time we've seen that this year in Chicago where they've contracted, which is kind of off and on here, and a lot of it's due to the stronger dollar and such. So we had a 48.7 for the month of November. On the other hand, we had pending home sales. We had about 4 months of contraction. There are pullbacks of declines in pending home sales. Actually, declines. Excuse me, declines, and actually went up 0.2%. Very modest, but at least it kind of broke that string of declines of pending home sales. So it had a slight improvement of 0.2% for the month of October. Stock market's down. We got a kind of a busy week this week. A lot of activities going on. They're expect a modest increase for the month of November for stocks, even though it's down for today. But this week we got the ECB meeting later this week about Thursday, which they're anticipating some type of quantitative easing or some type of stimulus package to be announced, as Draghi's kind of mentioned or hinted before. There's also Janet Yellen's going to be having speaking at some point this week. We got jobs numbers coming out, which will be one of the last times that the Fed will be seeing those. We got ISM coming in tomorrow. So we got a lot of stuff kind of on the docket this week. And then also OPEC will be meeting this week. So we'll have an idea. There's been a lot of pressure being put onto Saudi Arabia to cut back on its production to stabilize the oil prices, which many believe that they probably won't. They'll probably continue the same production level that they've been producing. So those are all different activities or events that are going to happen this week that we need to kind of pay attention to. Bond market's up today. We started the morning down closer towards the 10-day moving average, and since we've been up, we're about 9 basis points from where we left off yesterday. So it's higher from where we left off this morning, but even higher from where we left off Friday. Remember, Friday was a half day. I haven't reported this since last Tuesday, which we were right about here, and here's what we had Wednesday. So as you can see, we were kind of struggling between this resistance level and the 10-day moving average, which the 10-day moving average has been pushing us towards upwards, which is helping the bond market, kind of pressuring the bond to improve. Now the next probably pressure we're going to see is most likely resistance level, will most likely be the 200-day moving average, which has come down a little bit. If we can keep this going, this will help us out, keep us pushing upwards. We may see some improvement. We have some room for improvement in the interest rate. So I would be a little cautious, but I think we have a little room here to for interest rates for the next pressure before ceiling that we will see. All right, folks, you guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Take care. Bye-bye.